What we're going to talk about today, actually, this is a new format, so you folks get to be a little bit of a guinea pig for us. So I'm always looking for feedback. We recently did a major launch of this Raptor 2.0 trading system, and it was supposed to be closed for the next, well, now 6 weeks for the training, but there was such a high demand for it that we decided to start doing these weekly sessions just to give people exposure to it. If it makes sense, we have a path to bring you into the training, and the training also is recorded so that you can get up to speed very quickly, and it will repeat once you're a customer. So this is just kind of an avenue in if it makes sense for you. So my role today, besides talking a lot in the beginning, will be sitting in the background answering questions as Eric is talking, so we can let him do his magic. And then at the end of the session, I'll come back in and just let you know really where to go next for additional information. And like I said, we're always here to answer questions, and I look forward to talking with you. All right, Eric, I will be quiet now and hand it over to you.
All right, thanks, Adam. And thanks, everyone, for joining us this morning. Like Adam said, we're going to be demonstrating the new Raptor 2.0, showing you some of the features about the Raptor, what makes the Raptor different, really, from other trading systems. So probably the number one problem that people have when they're trading, well, if it isn't the number one problem, it's certainly up near the top, is finding a quality signal. Pulling the trigger on a trade. You know, how many times have you looked at a trade after the fact and said, why didn't I take that trade when it was building? Why didn't I get in? Well, the Raptor helps address some of those issues by focusing on what we call high probability trades. These are trades that have a very good chance of reaching their high probability profit targets. Best of all, the Raptor will also give you warnings when these trades are starting to develop so that you have a chance to actually get the order in before the market starts to move. So when the Raptor is producing one of these high probability signals, you're going to get an audio alert, you're going to get a warning dot on your chart, along with the audio alert, and a pre-signal warning on your screen. This is what the pre-signal looks like. And you can see the triangle and the hash marks printing there. The first triangle, when it was first printing, was actually a warning dot, along with an audio alert, drawing your attention to the trade. And then once the trade actually triggers, you're going to get one of your 3 high probability Raptor signals, and in this case it was number 1 signal, which we called the cloud crossover. And you can see that the signal had some decent follow through to it. So when you get the cloud crossover signal printing saying that, hey, here's a potential cloud crossover signal, get your attention to this market, then you can take that trade as it unfolds. Another one of our high probability signals is the soft edge buy, or its inverse, the soft edge sell. This is actually our counter trend signal, and you can see that it's also going to develop in much the similar fashion. We're going to get a warning dot along with an audio alert, so your attention is drawn to that chart. And as the signal is building, you're going to get the pre-signal printing in the top right corner of your screen, so you know what signal to be on the lookout for. In this case, it's a soft edge buy. And then once this signal prints, you're also going to get the confirmation of the signal. The soft edge buy is the number 2 signal, and this screen isn't backed out far enough, but again, we get some decent follow through on the signal. So once more, it's a signal that's printing. It's a signal that you can say, hey, this is a high probability signal. It's a signal I can take with a reasonable amount of confidence. Third signal is a continuation signal with the Raptor. It's one of those trades that allows you to get back into the market. You know, the number one signal develops as a trend is building, and number two signal is the counter trend signal. Well, the number three signal is the hard edge bounce. It's a hard edge buy or sell signal. It's a continuation signal. It allows you to get back into a market that may currently be trending. So, as with the others, you're going to get the pre-signal warning, you're going to get the audio alert, as well as the warning dot, and then when the signal is complete, you're going to get the triangle and hash mark. And once that signal is done, again, you can see that we get a reasonable amount of follow-through. These types of signals are all based on picking up market momentum. The nice thing about having the pre-signals, the audio alerts, the whole ready, set, go thing as well is that it enables you to watch several markets at the same time. You don't just have to concentrate on one market. You know, if some days the market you're watching is moving and other days it's not. But trying to monitor, say, 3 or 4 different markets simultaneously is also difficult because sometimes you end up missing signals, right? Because if you're just watching like a traditional, say, 5-minute chart or 15-minute chart or a 233 tick chart or whatever your flavor of the month may happen to be, it requires a great deal of concentration to see your trades as they're building. But by having the Raptor and the pre-signal and the audio alerts, we've tried to make it easy for you to recognize when a high probability trade is actually setting up. All right, well, that's all well good. You say, let's take a look at some of the charts. And actually what we'll do right now is allow me just to take a break from here, and I'm going to go to today's session, and we'll show you what's been going on in the Raptor today. So this is the NASDAQ. We were watching the NASDAQ here this morning. And early out of the gate, we recognized that there was a big opening gap below the market from where the trading left off the day before. And you can see that we actually, through the overnight, for those of you trading the European session or in alternate time zones, we had a nice number 3 signal. That's the hard edge bounce produced right here around the Asian Open or shortly after the Asian Open. That carried right through the London session, and the North American Open somewhere around here opened around 51.50, 51.55. I forget the exact number. I think it was 51.55. After that, the market slid a little bit, went a little bit sideways, tried to produce a hard edge bounce. It never triggered, however. Came right back with the counter trend signal, the soft edge sell. And we actually saw this one developing. We were waiting on it. We saw it developing. It printed, and we got on board with that, and we had some very nice follow through to the short side.
Hey, Eric.
So, yes, sir.
Real quick, just because I know that there are newbies in the room, really, to us in general and the Raptor. Can you just take one step back and just explain the core visual components that every Raptor chart has and their relationship to each other?
Yes, sorry, I should have done that right out of the beginning. The Raptor, what we're looking at here is we've got the Raptor clouds. These clouds here give us our directional bias. They are not Ichimoku clouds. I know they look like them. Everybody says, oh, those are Ichimoku clouds. No, they're not. But these clouds do give us our directional bias, and they do tend to show us when a market is overbought or oversold. So when the clouds get really extended like they are here, the market is definitely overbought, and we would anticipate a little bit of a retrace. The blue bars are bullish bars. You can change the Raptor colors if you like. By default, these are the Raptor colors, but if you want to go with the traditional green, you can change them to green as well. The magenta bars are bearish bars. So the Raptor will also paint the bars depending on the market's bias. So when the bars are blue, the conditions are more bullish. When the bars are pink, the conditions are more bearish. And when they're yellow, the market conditions are more neutral. Hollow body bars print much like a traditional candlestick. All that means is that the open, or pardon me, the close is above the open. So this bar opened sometime during the life of this bar, it traded down here, and then it closed up here. So again, it's a bullish bar. Solid body bars are more bearish. The close is below the open. So the market opened here, drifted higher, and then closed lower. You'll notice that you can get some bull bias bars that are actually solid body, which means that this bar closed lower than it opened. And likewise, you can get some hollow body bars that are red, which means that they closed higher than they opened. So these were actually drifting up, even though the underlying bias is turning to be a little bit more bearish. The filter here across the bottom is the whole Eagle Trend Trader programmed into the filter down here. This is very much a momentum style filter. And what it does, if you look at the filter, I got to go back here a little ways, you can actually see the momentum start to shift. Usually it will break up a little bit more than this. This was a pretty quick shift in momentum. But what you'll see is here we've got the magenta block, and then all of a sudden we've got some buying coming in. And then you can see the sellers come back, but they're not as strong. They're starting to lose their grip. Now the buyers show up again, and you can see that the momentum is starting to shift towards a more bullish bias. And then we come in and we produce our buy signal, and then the market continues on from there. All right, so those are the basic points of the Raptor. The bar style itself is the indicator mean Renko bar. And what that is, it's a range style bar. It's actually a combination of Renko bars and candlesticks. So it gives you all the advantages of a range style Renko bar, which are extraordinary at picking out support and resistance areas. You can see here on the chart, it's very plain where support and resistance occur. The problem with range style bars and Renko bars is they lack the sensitivity. If you've ever looked at a regular Renko bar, just those blocks that occur, it makes it really difficult to see which way the market is leaning, or if the market overshoots one way or the other, or even just to draw a basic trend line. Those are not really easy to do with a Renko style bar. But with the mean Renko bars, it's a hybrid of a traditional candlestick with a range style bar. So it actually gives you that sensitivity. So you can see when the market is starting to fade, or when perhaps it's starting to get a little bit stronger, because it will print wicks and tails on your bars as well. So, a lot of advantages with using the mean Renko bars, and those are the default bar style for the Raptor trading system as well. So when the clouds are stacked in this fashion, we're going to be more bullish. We're going to be looking more for buy signals, the exception, of course, the number 2 signal, which is counter trend. And when the clouds are stacked more in this fashion, we're going to be looking more for selling opportunities. Now, we review these things in the trading room as well. You do need to consider market context when you're looking at your signals. In other words, just a really quick example, this counter trend signal. Well, in order to have a counter trend signal, you first need to have a trend, right? You can't have a counter trend signal if you don't have a trend first. And then what you need is you need to see the market fail. You need to see a retest or an attempt to recover the trend, and then the failure. So once you have those components, then you have a valid counter trend signal. That's what made this number 2 signal so strong. All right, so there's just an example of the some of the signals that we had this morning, and very, very good follow through on that NASDAQ sell-off that we had earlier. Now, let me get back to the presentation slides. And
hang on one second, Eric. Hang on one second. I just want to step in for a second. So, so one of the things, folks, that we're known for in the industry are really clean charts that are very well designed from a software perspective. And that's because, assuming you've been at this a while, I'm sure like the rest of us, you went through that phase in which you basically had, spaghetti salad on your charts with, 50 indicators, and they were all supposed to tell you something, and in the end, having all of them there told you nothing. And so we spent a lot of time on the design of these charts such that what looks like something that's simple on the surface is actually quite complex behind the scenes. And so if you look at the name of the system, you'll see that it's called DTS Raptor. The DTS stands for Diversified Trading Systems. And this is one of our claims to fame. We brought the whole traditional 401k asset allocation methodology that people typically use for portfolio management, and we brought it to the day trading world, in which our approach to day trading, or signals, is to actually have a variety of systems running at the same time in the background, all presented on a simple screen. So what Eric was alluding to earlier was that filter at the bottom, that's an entire trend trading system, all represented with that one visual element. The price action bars that you see there, that's an entire scalping system that is represented by that visual element. And the traditional alerts, you see the ready, set, go alerts, that is actually based on a swing swing trading system to generate those. Minus these numbers that you see on the chart, the 1, 2, 3, that would be the original Raptor 1, if you're wondering why there's a Raptor 2. But after about a year and a half of working with Raptor 1 in the room with our customers, it became apparent that there was a desire, request, need, as you will, to take even more subjectivity out of the equation. And so we went back to the drawing board and actually codified the setups that Eric's been teaching for years. And that is what the 1, 2, 3 is all about, which is why everybody's so excited about them. That instead of having to subjectively see these things, now the software identifies it for you for the highest probability follow-throughs. Now, you still see these other signals. That's a more advanced level. You start off just trading the 1, 2, 3s. Some people stop there. But if you want to go to the next level, which involves more discretion, you see those 1, 2, 3 setups. So just some subtleties behind under the hood, if you will, but it's geeky, but I like it. Anyway, okay, Eric, thank you.
Sure. Actually, I'm glad you mentioned that, because people are probably wondering, well, we got a sell signal through here. Would we not have taken that sell signal? And as Adam pointed out, that's one of the more advanced signals. We do address that in the trading room, and I teach you how to recognize these signals as well. But allow me just to go back to the presentation here for a moment. Okay, so as Adam already mentioned, we've got the whole warning system with the ready, set, go. You can see when a warning dot starts to print, you're going to get an audio alert. You're going to get the pre-signal printing. You're going to know that the signal parameters are starting to be met. When the signal parameters are complete, you're going to get a triangle and a hash mark. This tells you that as far as the Raptor is concerned, all the signal parameters are met, and now it's up to you to make a trading decision. And when the signal finally prints, well, then you're ready to go ahead and take that trade. I've already talked a little bit about the custom mean wrinkle bars and the advantages with them, namely that they have the power of a wrinkle bar, of a range style bar, of showing you clearly where support and resistance levels are. Support and resistance really just supply and demand in action. But you can see quite plainly when momentum is starting to shift, because you'll see the buyers getting stronger, you'll see higher support levels, you'll see higher resistance levels, vice versa when the market is starting to get a more bearish bias. These things are not so easy to see on a time-based chart or a tick-based chart. The trade manager is a huge component to the trading system. It's funny, I shared in the trading room this morning when Adam first told me his intention to build this piece of software. I said, it'll never work on a PC. It's just too complicated, because this is the type of trading software that is usually only available to the big firms on Wall Street. But Adam, hats off to you. He brought this to the retail trader. What the trade manager does, and I'll show you a little bit more detail here on the live chart, but it protects your capital. And capital preservation is probably your biggest challenge as a trader. Not blowing yourself up. You know, if everybody's going to take a losing trade. I like how Ed Sequoia, the famous trader, said, if you never want to take a losing trade, stop trading. And this is from one of the best traders in the world. But what successful traders like Ed Sequoia do so well is they have impeccable money management. Well, this tool right here allows you to do that exact same thing. All right, let me show you how this Trade Manager works. Trade Manager, this tool sits here on the right side of your chart. It has two components to it, basically. The bottom portion here is what we call the Risk Manager portion, and then we have the Profit Manager portion. Let me deal with the Risk Manager portion first, because it's arguably the most important feature of this piece of software. There are two trading modes. There's the risk percent mode, which will cap your risk at whatever this value is. Currently, I have it set at 2% of my capital. So that means no matter where I place my stop, I will always end up risking 2% of my capital. So here you can see it's $385 if I run a very, very tight stop. If I run a looser stop, let's say I want to put it above that swing high, oh look, it's still about the same amount, roughly $400. What if I want to run a deeper stop still? Say I want to put it above that swing high right there. All right, a little bit of a rounding thing going on here because we're down to one contract, but you can see how the Trade Manager is always going to keep my risk the same. Well, why is that important? Well, because you're never going to blow yourself up this way, and you're never going to strangle a trade. What I see a lot of traders do wrong, people come to me for one-on-one coaching, and what I see them do wrong almost all the time is they'll strangle their trade. So they'll get in, they'll place their stop right here, and they don't even give the trade a chance. You can see the DTS, the Raptor system here is very good at picking up immediate market momentum, but every once in a while, you may have to take a little bit of heat on the trade. But if you put your stop right here, you have no chance of writing out this trade. Well, if your risk is always going to be capped at 2%, and if you're always going to risk $400, why would you not leave a more reasonable stop? Right? At least to start. Why would you not place a stop up here? Allow the market, to sort itself out. Let's say it moves against you a tick or two, and then starts to head lower again. Well, at this point, you can start to roll your stops in. Right? You can bring your stops down here, and then depending on what stop strategy you use, you can roll your stops accordingly. But so many traders, I see it time and again, they stop themselves out before they even have a chance. Well, the risk percent mode prevents that. It allows you to place a reasonable stop while never risking more than you can afford. There is also a manual mode. If you click on that button, it will toggle to a manual mode, and it will default to this quantity right here. So let's say you always want to trade, whatever, 3 contracts. You want to cap out at 3 contracts, you can set that so that you'll set your trade and you will always have 3 contracts in play. You can also preset up to 3 profit targets and have a runner in play. Currently, I have it set up as a 50-50 trade with my first target at 20 ticks. But if I wanted, I could set another target, say at 20 ticks. Oh, sorry, or take another 20% of my trade at, say, at 30 ticks, and then it will set up my trade accordingly. Once you click the submit button, the trade goes live, and then the trade manager takes over the trade management portion of your trade. Now, the trade management portion, we have 16 different stop strategies here for you to choose from. All of them are fully customizable. So right now I'm on the ATR stop. I could make it a little bit more conservative, give me a little bit more staying power. You see how these blue dots trail here? That is how the trade manager will roll your stops for you. So you can change your strategies mid-trade. So as we did with the trade that we had here this morning, we started with a more liberal stop, and then as we started getting more and more open profit, I ended up switching to something more aggressive like the parabolics, and ended up getting stopped out here on this little bit of a reversal. So the trade manager does 2 very important things for you. Well, 3 very important things for you. First off, it never allows you to risk more than you can afford. Secondly, it also correctly capitalizes your position so that when you do have a winning trade, you maximize your earnings. It's not just about minimizing your losses. You also have to maximize your earnings. You've all heard that expression, cut your losses short, let your profits run. Great idea. Too bad nobody tells you how to do it. Well, this is how you do it. You cap your losers, and you allow your winners to maximize by maximizing the quantity that you can afford. Right? This is how many contracts I can afford while never risking more than I can afford to lose. So those are important points 1 and 2. And then, of course, number 3, Trade Manager gives you a way to manage your trade once it's underway. So just a very, very sophisticated and important piece of software. You also have buy and sell market buttons up here. So if the market is unfolding rather quickly and you just want into a trade, you can just punch into a trade with the buy and sell. You can close out the trade here. We've got an auto break even feature, but you can also manually take the trade to break even. Currently it's at a break even plus 1 tick, but you can protect more. Or you can even, protect negative ticks. You can go to have it roll to break even minus 2 or 3 ticks if you don't want to crowd the trade too much. There's an OCO feature, OCO standing for one cancels other. So let's say, like right now, we've got a market that seems to be drifting a little bit sideways. Let's say you wanted to bracket that. You could set an OCO order to buy and sell. So you can buy above, sell below. And these orders are linked to each other. So If we fill here to the short side, it's automatically going to cancel the other order. If you have a stop strategy enabled, Trade Manager will automatically give you a stop. If you cancel the one order, the other order will automatically cancel. And a brand new feature here on the Trade Manager as well is the panic exit. So, you know, if you've been trading for a while, every once in a while, something may happen and the market just comes unglued and you just need out of the trade right now, you can click your panic exit button and that will flatten everything. It's also not a bad idea to click this at the end of your session, and it will make sure that you are totally flat on your position going into the end of the day, so that you're not mistakenly carrying anything in the overnight. All right, let me go back now here, and
So let me step in for a second. So is everyone yawning yet? Right? This is the problem we have with this particular tool. It is by far the most important piece of trading software you'll ever come across, this Trade Manager, and it's just god-awful boring, right? And so it doesn't sell well because it's not sexy, but that's the very reason why it's so critical. And I just cannot explain to you how important this is. This is the product. Look, everybody loves our clean charts and our accurate signals, and that's great. But it's the Trade Manager that I get the calls 3 months later with the, why didn't you tell me about this 3 years ago? And I'm like, well, it didn't exist 3 years ago, but excuse me. Well, it did actually, but a version of it. It's just so important, and I know that 99% of the vendors out there are just hawking their entry signals, and because it's sexy. I get it. I'm a marketing guy. I get that. But if you think about it, if you trade like 99% of the people that are out there, which is typically one contract, right, and then you wait and build your account to 2 contracts and 3, you're trading like everyone else. Well, there's a 99% failure rate in this industry. So if you're trading like everybody else and everybody fails, why would you expect your outcome to be any different? And so this is the software or the tool that allows you to trade like that 1% that actually makes it in the game. Ironically, as Eric said, if you flip it to the institutional side, most people on the institutional side are focused on risk management and asset protection and not on the entry signal. It's just different on the retail side. But I really, I can't emphasize enough how important this is to the overall solution here, which is, we don't casually say that if you're using the DTS system, this should be the last system you ever need to purchase because it's comprehensive. You don't need to add anything else onto this. Now, I'm guessing all of you all have your magical super secret indicator that you love so much, your Illuminati line or whatever it may be. And that's fine. As Eric always says, if you do have an additional tool or indicator that you really like, if it helps you make a decision quicker, keep it, right? We're not saying like throw the baby out with the bathwater. However, I would recommend if you move forward with this solution, you give it a chance on its own, see if it really addresses all of your needs, and then decide if you want to bring back, your super secret, whatever, Trump trend lines. Anyways, so I'll get off my soapbox, but it's just critical that you guys take the whole.
It is. No, it is critical, and like Adam says, unfortunately, it isn't sexy. But let me share with you a quick story from one of our owners, and this is a typical story, although maybe not typical in as far as this particular person has taken it. But one of our owners came to us a few years back, and he was always a onesie, twosie trader. He'd trade one contract, maybe 2 contracts. He'd make a little money, he'd lose a little money. And I think he was trading for about 3 or 4 years. And he really hadn't gone anywhere yet. He was pretty much still at the same place where he had started. Then he came to us, uh, got the DTS system, got the trade manager, and allowed the trade manager to control his risk. So now all of a sudden he was trading, 3 contracts, 4 contracts, 5 contracts, as his risk would allow, but never lost when he had a bad trade, never lost more than he could afford. Within a year, he quit his full-time job, and he had a good job. He was a nurse. He was doing pretty well for himself. 2 years later, he's trading other people's money. That is how powerful this whole notion of controlling your risk, capitalizing on your opportunities correctly. Folks, it really is, if you're looking for the secret sauce, like Adam likes to say, that is key. I always like to say you need 3 components to be a successful trader. It's like a 3-legged stool. 1, you need an accurate signal, right? You need a signal that you can take with a great deal of confidence. The Raptor does that. 2, you need a way to manage your trade. You need to have a stop strategy or a way to manage your trade once you're in it. The Raptor does that. 3rd, you need correct money management. You need to be able to get into a trade with a great deal of confidence, have a way to manage it, and yet not blow yourself up if the market moves against you. Because let's face it, we are trying to predict future events here, right? We're looking at the chart and we're trying to say, okay, we're generating a number 3 signal here. It's a hard edge bounce. The market should drift lower. Well, what if it doesn't drift lower? I need to be able to cap my risk. Now, somewhere through here, the market's probably going to give me another little reactionary move and give me an opportunity to at least adjust my stops so that, let's say the market, comes down like this and then reverses and goes up. Okay, it was a losing trade, but rather than lose $300, maybe I lost, $75 or $80 here. So whereas I was originally set to lose 2% of my capital, now I've lost less than 1%, actually less than 0.5% of my trading capital. Those kinds of losses aren't going to ruin you. The loss that is going to take a big chunk out of your account, and again, I see this all the time. People come to me and they say, oh, I'm a conservative trader, I'm a small trader, I'm only going to trade 3 contracts, and I'm going to do it all the time because I only have a $10,000 account. So they go in and they set up their trade like this, and the market comes in, comes up, stops them out, and okay, so you took a $165 hit, but let's say you do that 2 or 3 or 4 times a day. You do that 3 times a day, that's a $495 hit, $500 hit. You can't afford that. Not if you're trading a $10,000 account. So why would you, strangle your trades? Why would you place your trades so tight? Why would you lose more than you can afford? And everybody thinks, oh, it's the entry signal. I need the latest, greatest tweak to whatever settings I'm looking at. No, you need all 3 components. You need the signal, you need the trade management, and you need the money management as well. All right, so I think now we're, Adam, we've got a promotion or an offer for everyone.
All right, so we're at the end of, let's call the technical presentation. This is easy. All you need to do at this point is go to indicatorwarehouse.com/raptor.offer. Pretty straightforward. I'm going to drop this into the question area. I'll just respond to somebody and drop it in there. Give me a second. Let's see here. Just find somebody. Yeah, there we go. All right, so do you all see this link? Is this showing up in there? Just so you can click on it. I mean, you could write it down also, or email me as you wish. Go watch that. It covers everything necessary to get involved with the Raptor. The other thing is, after 7 years, this is the first time we've ever offered a money-back guarantee, and that just shows you how confident we are in the system. And so that's also covered in the video. And then, if the video meets all of your questions, needs, whatever, there's an opportunity to purchase the system there, and from there we get you set up. We install everything for you, get you ramped up as quickly as possible, get you into the trade room, and off you go. If you have additional questions, welcome to contact me, and we can talk on the phone, email, whatever you're comfortable with. This is the kind of thing where I recognize it's a serious investment, and so I want to make sure you do your due diligence and you come on board as an informed customer. I much prefer people who have looked around and understand the value of what we have to offer, as opposed to some gung-ho newbie who just gets excited and has these irrational concept of what trading is. So with that, I'm going to close off, unless, let me just check real quick if there's any other questions. I don't see any. I think we did a good job today of covering everything. Again, if you need to reach me and ask me any questions, I'm Adam at Indicator Warehouse. And with that, we're going to close out, and I thank you for joining us today.